Hello and welcome to another episode of the Investor Financing Podcast. I'm your host, Beau, and today we have a great guest and we're going to talk about commercial lending with a credit union. And I originally met the speaker today. I was looking for a client that needed some funding on a multifamily property, and I stumbled across Cory because that's what I do sometimes when we need to go and find a new lender. Sometimes you have to dig through to get the good lenders, and I happen to find a very good lender, Cory Alexander at Y-12 Federal Credit Union. He covers the Knoxville, Tennessee market and a couple other counties, Sevierville,
Yep.
Smoky Mountains. So the surrounding areas. And you guys often hear me talk about local banks, credit unions. My first, when people come to me, and it's a particular deal, I know it's going to be a good either regional bank or credit union. I prefer the credit unions. Credit unions usually have better pricing, better terms, and better everything. But not all credit unions are created equally. But with Cory's program, we closed, it was like a 20-something unit multifamily deal. And the terms were absolutely fantastic. We got 80% leverage. And it was probably one of the easiest deals I've ever done, to be honest with you, in the commercial lending space. It was super easy. They did what they said they were going to do, and they executed perfectly. So please welcome Cory to the show. Hey, Cory, how's it going?
Good. Thanks for having me, Beau. Yeah.
All right. So with a credit union, usually credit unions are localized, meaning it's for the members in the community. So ideally, if you're looking for finance in the areas that Cory services, you would want to have either one of the partners or a property manager, somebody boots on the ground that lives in the area that could be the open a bank account, because you have to be a member of the credit union in order to bank with them and get loans and so forth. Is that pretty accurate on how the credit unions are geared?
Yeah. So there's some ways to make a person a member. So the technical term for the credit union, you have to live, work, or worship in the area in which the credit union operates out of. So with that being said, if you are looking at an apartment complex, 25 unit, and it's in Knoxville, well, that kind of means that that's where the work is, but the actual person can live anywhere. So as long as we can show proof that he's working in that area, then he can live out of state or whatever. That's why Knoxville and the surrounding market, but it really dictates the property.
Okay, got it.
Yeah.
And what kind of loans, other than multifamily, are you guys doing right now? What types of loans? Are you doing construction? Or are you doing mostly industrial?
Yeah. So I there's really not any type of loan that I won't. The ones that we won't probably touch are the ones that you probably run into with banks, like hotels that get opened from the outside. Not like a flagship hotel, or maybe like an old gas station where I'm going to get stuck doing an environmental, and we just kind of stay away from those. And we don't really do C stores right now. So like the convenient market, the store that where the only tenant is like a sub retail shop or something, or like any like type of C stores. I mean, even if they don't have a gas station, we kind of right now we shy away from C stores.
And your loan approval process seemed really simple compared to most lenders. Is it really just the credit committee is like 2 or 3 people and they meet regularly? So it's not like you're waiting for this whole big process. Like every Tuesday we meet at 10:30 a.m. and this is when you guys are pretty on top of it, and you get answers quickly. So you pretty much know with your initial conversation with Cory if it's going to be a doable deal. Your terms and fees are usually superior, and I don't believe do you have prepays on your loans?
So it's illegal for a credit union to have prepays.
Exactly. I wanted to point that out, guys. Another advantage for working with a credit union is, it's weird. I had one credit union that said they did prepays, and I'm like, I thought it was illegal. I don't know how they're doing it, but anyway. So
Or it might be it might be just in the bylaws, but I just know that most credit unions don't have prepays.
Yeah.
But I thought it was in their charter or something that you can't do it. So I
Maybe
don't know.
it's just all federal credit unions.
Maybe, yeah.
But yeah, that's a good point. So everybody watching and listening, you know, if it's a deal that's cash flowing or it's a value add for property, you guys will look at value add multifamily too, as long as the numbers, the debt coverage in place is if there's a story behind it that they're doing value add, you can still get them to work even if the debt coverage is a little less.
Oh yeah, yeah, like storage facilities. It's a perfect example where you're buying a storage facility that's not 100% occupied, and the people coming in know what they're doing, and they create a pro forma for me, and we kind of understand what they're talking about. If it's the commercial appraiser, usually does a pretty good job of figuring out what the rents should be and for the market, and we take all that and put that in the pro forma. But we don't really look too hard at most people need like a debt service coverage on the property be a 1.2 or higher. I really need like a 1.1 or higher, just to make sure you're at least able to service the debt. But we go off global debt service coverage. So we look at the person, and as long as he's able to do it as a whole amongst all of his properties, I mean, we'll rock and roll with. But I do have to have a 1.2 on the global debt service coverage ratio.
Right. So anybody watching or listening to this right now, basically what he's saying is that if you're super strong with your other business cash flows, that they can, they're not as concentrated on this property particular. They understand there's a value add component to it. So when you're talking to bankers and lenders, this is the conversations you want to have, and make sure you're expressing the story in the same way. Because, you know, if you go in and say, well, my 25 unit building's only half occupied, but yet the debt service is 1%. I've got 5 other buildings and I have plenty of cash flow. You know, a localized lender will make exceptions. They don't have a strict credit box like some of these national lenders do. And that's why I'm always priding myself on, like, listen, you have to make relationships in your local market. And if you don't want to do that, call me, I'll help you. I can find guys like Cory in different markets. I have to say Cory is really good. But that's what I do for a lot of my clients. If it's not a national deal that I'm placing for financing, I network with people like Cory, because I learn a lot of things. Like, you can do certain cool loans that you might not find on the national lenders. Plus, the difference really is, on top of all we're just saying, it's personalized service. You're not like just a number with a credit union. You're actually getting personal service. You're talking to Cory. You know, there's not 50 layers to get an answer. There's like 2 layers to get an answer. So it's super simple. So this show, really, I wanted to get you on, Cory, is really just to talk about the importance of building relationships with local lenders, and then really finding out which ones are good, which ones aren't, and then you can build ongoing relationships. What your thresholds for lending? Can you do like $10 million deals, or 7 or 12? Do you have a lending limit?
Yeah, I mean, we can go up to 15 million. I mean, technically, it's like 9% of our portfolio. We can't have anyone that has 9% or more of our total outstanding portfolio, but our outstanding portfolio is like 250 million. So we could go up to like 25 million. But for a new person, a one big deal, probably about 15 million.
Do you ever do any like deals for people that own large portfolios of rental properties, and you do like a one loan against like 10 rental properties, single family homes? Can you do stuff like that?
I can. I gotta be upfront when I have that conversation, because sometimes people that have 10 single family homes, they like the convenience of having just one loan, one payment. They've got it all in their big portfolio, but there's some upfront costs, because you got 10 appraisals. You got, there's some upfront costs there, but yeah, I totally do it. And then what you just want to have that conversation with the real estate investor is, okay, do you buy and hold these properties, or do you have lease to own on some of these properties? Because it can be a pain in the neck sometimes when somebody is like every year saying, hey, I sold another property on my portfolio, I need to, so you're always constantly like having to redo like, not the note, but you
Releasing.
sold it for 100,000. You gotta, you might have to pay down 50,000 to keep it at 80% loan to value, or whatever the loan to value you did the 10 properties. Let's say if it was 75 and they sold one of the properties, I have to make sure I'm 75% or less when I relinquish one of those properties. So that's why they may have to put some money down on the note, and then they get the excess cash. So sometimes what I recommend is maybe doing 2 notes or 3, and then they pull the ones that maybe they're going to keep long term, and then maybe do a couple of the ones that they might be selling in the next 5 years or 3 years or whatever.
Yeah, that's a good idea. That makes sense. And so your general terms are either a 5, 7, or 10-year fixed. Are you guys amortized? I forgot if you're 25-year AM usually on your multifamily.
Yep, we'll go 5, 7, 10. We'll even do 15-year fixed.
Oh wow.
And we'll amortize that over 25 years. And that's just policy. That's not even an exception. I mean, that's just like, hey, what do you want to do? You want a 10 or 15-year? Do you want to do 25-year AM? Okay, these are the rates. This is what we got. And then,
yeah, I mean, that was good. Like, because I think rates are obviously trending up. So now's the time to probably lock in long term. And if you're thinking about refinancing, it was probably a good time like 3 months ago versus now, but it's still very good. Rates have creeped up, but it's still
dropped 3. Yeah, they dropped 3 base on my 10-year treasury. They dropped 3 basis points today. With this whole thing going on with Ukraine and Russia, I have a feeling we might see a little bit of a dip maybe next week in rates. So here's the other good thing too, is once I get a halfway complete package, once I submit it to underwrite, I can lock the rate for 60 days. So banks usually will be like, okay, our rate is between 4 and 4.5. And, I'm not sure but we can't lock it in until like a week before closing or something. And, I never liked that because I worked for 2 big banks, and that's the way I had to quote my rate. I'd say, well, my range is between, my 5-year fixed is like, 4 and 4.5%. I can only amortize it out 20, and then, but I'm not gonna tell you the rate until like 5-6 days before we close. And if you're a broker or something and you're trying to relay that to a investor or stuff, I mean, that's a hard sell because they're like, okay, what kind of game are they playing? They like having that locked rate, and I can do it the minute I send it to my underwriter, which is nice.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So what are some tips and tricks you would suggest for somebody out there that's watching this and they want to start submitting loans to a commercial? Maybe they're a residential investor and they're buying their first bigger multifamily property. How do you like to interact with clients, and how do you think the process goes smoother from day one? What are some tips that get you there to the finish line without as many problems?
Yeah, I'll tell you, personal finance. So what I require is a personal financial statement, a business application, 3 years personal tax returns if it's over 2.5 million, or anything less, I can do it with 2 years tax returns. And then if they've got an LLC already established or whatever, then I'll need those business tax returns too. But that's really it. But one of the tips would be is when I send you something that's a personal financial statement and things like that, take the time and just fill it out the first time, sign and date, because I tend for some of these first time investors and things like that, they think that they can just kind of throw it all together and then they send it, and if it's not a full complete package, it really makes it hard on the underwriter and myself, because you're trying to like make sense of the story, because the tax return and the personal financial statement really tell the story. And if I can get a full complete package, I'm not going back and forth asking, hey, 2019, did you sell this property, or what did you sell it for? Or what happened here? The address isn't matching up. I mean, it can really delay. So if my biggest tip would be just make sure the personal financial statement is filled out fully and accurately, and have a good email and cell phone or telephone, and let me know if you like to receive text, because I have found that if I can text the person that I'm talking, I mean, I can get quick questions asked by just a text. Hey, this is Cory. I'm working on your investment loan. What happened in 2019? And it's not like I'm grilling you. It's really just because I have to write a credit memo. And so it's telling the story that makes sense. And I think that's where a credit union can really benefit some of these people, is because if I can tell the story and sell the story, we'll stretch stuff out. I mean, I've never seen a more advantageous approval process than working at a credit union. And like I said, I've worked for small community banks and 2 large banks, and going to Y-12 about 2.5 years ago was the best decision I ever had. Because I'll be honest, I almost got out of the banking business and I was going to go do totally something else. And then when my boss called me and said, hey, I'm hearing good things about you, would you ever consider a credit union? I didn't really know what all the credit union did. And then when I found out the kind of rates and terms we had, I was like, this is an easy sell. And it's been the best decision of my life.
Yeah, that's awesome. And I agree. And I'm an advocate of your credit union and yourself, because I know I've experienced it, that it was a great experience. And I've found, in every market, there's probably maybe one decent bank or credit union in one market. Usually you got to find that one banker that is good. And I found you, so I'm glad. So any of my clients that are in your neck of the woods, can you tell me your footprint where you're lending mostly?
So Knoxville, Knox County, Blount County, Kingston, Sevierville, Roane County, La Follette. I mean, take a 15-20 mile radius around Knoxville, and that's where it's at. But here's one thing that I will tell you, though, is once I close an investment property in Knoxville, and let's say they're out of state and they are looking at a property maybe in Chattanooga or something like that, I've already created a membership for them. So I can look to go outside of my footprint because I've already established them as a member with the credit union.
Well, that's good to know.
Here's something else too, is if somebody is looking at a property that, let's say someone lives in like Cleveland, Tennessee, and out of our footprint, let's say their parents or their brother live in my footprint, I make them a member, and then I'm able to establish membership with the person looking at that property. So there's some ways that we can make the membership is the key. So if you can't become a member, that's what kind of that's the key, is making sure that you're able to become a member of the credit union.
So guys, if you're listening correctly, if you have a deal in the area and you just want to talk to your loan officer first, make sure you can get a membership, and then you have some other benefits, even if it's a little bit outside the footprint. But it's really important too, if you're an out of town investor, to have a conversation. Hey, I own and operate 2 multifamily properties already in the area. So then you're working in the area, so you can actually become a member. And that's the key of these credit unions. And credit unions too, I think the way they're geared is because you're actually a member, you get like special like on your depository relationship too. There's a lot of perks. So not just only your commercial lending, as a member of a credit union, when I deposit money into my checking or savings account, you're getting some dividends, I think, or so forth. So
well, because we're nonprofit, so we don't have shareholders like banks do.
Yeah.
So we don't have stock. We don't report like a big bank. They really answer to their shareholders, where a credit union is nonprofit. We report to you as the member. And I think that's why that kind of switch in the philosophy, I think that's why you get a little bit better service.
I agree. So, all right, everybody, I think we asked Cory a bunch of questions and he answered very well. we now know why credit unions are probably one of the top choices to look for your next commercial financing project. Cory, any departing words for our audience?
Hey, I'll just say one more thing that I think I try to do well is, and you do it well too, Beau, is when someone emails you something and then and you get it, you receive it, man, it takes nothing just to respond back that says, hey, I got it. Or the other way around, like I send something to somebody and they say, hey, I got it, thanks. That makes such a big difference, because you're always wondering, okay, I sent him the tax return. Did he get it? Is he working on it? And then just to get that reassurance that, hey, I got it, it makes a world of difference, because then you're just sitting there going, okay, did he get it? It's now 4 o'clock. It's 5. I think that really helps. And you do a good job of that. Whenever I respond or something, you always respond back, hey, thanks. And just the world that we live in now with emails and text messages and stuff, getting that little thumbs up or just that email when you receive it, just to let that person know, because from a investor standpoint, it really puts them at ease, and I think it makes the process a lot better.
Yeah, I just closed the loan, and it was a portfolio of properties, and they waited to, like, I gave them the needs list. They waited, and then like towards the end, they're trying to close on this acquisition, and it's like, okay, well, you just got me the full needs list, and usually these underwriters want the whole package before they do the final underwrite, because they don't want to keep on going back and forth. And so it's just like, I'd love borrowers just to get it, like, hey, I get it. Like, it's hard sometimes. Like, it's easy just to piecemeal stuff to your loan officers, but it really works better if you just set up a Dropbox folder or a desktop folder, put everything in there and upload them all at once, and be a little bit more detailed. Like, for me, I'm not the most detail oriented person, and I've just learned over time, it's so much easier to be detailed. Now I have this little app, it's called Pipe File, and I give people the needs list, and it checks it off, so they know at any time what they need to. They can go in the system, upload it securely. Because for me, I hate the whole paperwork thing. That's the one thing I hate about being a mortgage originator. It's like, yeah, I'm not really a paper guy, but in our business you have to be. So you have to just know. But as a borrower, because I'm actually doing a loan right now on a refinance on a little single family house I have, and it's just like, I'm going through. They ask for something, deliver it right away, because I know it's like, if you want the deal to go quicker, you got to be quick. As soon as they ask for something, get it to them. Don't wait, and then like people wonder, well, why isn't it closing on time? Well, because you didn't get the stuff to them on time. And there's, the time they get their conditions, they need 24, 48 hours to underwrite, to go through, and then they need another 48 hours for docs. And there's processes that unfortunately people can't wave their hands and it just magically appears. So I agree with you 100%. Just be a little bit more organized, acknowledge receipt, very simple things, but believe it or not, a lot of people don't do this stuff. And be clear, fill out your financial statement. What's in your bank account? What's your account numbers? What do you have? What liabilities do you have?
It saves so much time, because think about these underwriters. I mean, they're working on 10, 11 files. And if they're working on your file and all of a sudden something's not complete, everyone does it. They sit there and go, hey, Cory, the social wasn't included on and what they do is they go to the next one on the list. Now yours is back over. And if it was completed, they can just work through the file, knock it out, underwrite it, get it back to you. And it really does go faster. And
also, the last thing I'll add to that is the less the underwriter has to look at the file, because sometimes they go back in and then all of a sudden they catch something that they now ask for another condition. So you're better off getting them all the conditions at once, because if it's all reviewed, they're not going to go back in the file again and think of something that they didn't paper trail correctly, and you got to like dig through and get some bank statements from where you transfer the money from. So that's the tip of the day. I think number one takeaway: find a good credit union. If you're in the Knoxville area, you know who to call. There's Cory. And for any other loan help, feel free to book an appointment below. Please like and subscribe so we get more YouTube views, and we share this with more people that are investing in real estate throughout the nation. Cory, thank you for your time, and it's always a pleasure to talk to you.
Yeah, you bet, Beau. I appreciate it.